Good morning, good evening, good afternoon to people joining us from different parts of the world. Really excited to have you guys here. Uh, Today is our session at the India Conference at Harvard 2022. Session for today is Emerging Sectors Contribution to a $5 trillion economy by 2030, focusing on aviation, fashion, and e-commerce today. For those of you who are joining us for the first time today, quick couple of lines on the India Conference. The India Conference at Harvard is put together by the undergraduate and the graduate students here at Harvard University. We've spent the last few years bringing together eminent leaders, distinguished thinkers, renowned experts across government, business, civil society to talk about what we think are some of the critical things about India and its future in the global economy. Quick housekeeping items before we begin our discussion. The flow will roughly look like the following. The conversation will happen for about 45 minutes, post which we will have audience Q&A, which you can access via the Q&A function, which should be showing up on your Zoom screens. We encourage you to put in your questions, ask the speakers, the pressing questions that you have. Please be respectful and civil in this process when you do put up the questions. A couple of other things, please tag us, use the hashtag ICH2022, which we'll put on the chat to tweet, put out there on social media. And let me quickly introduce the speakers to get started. I think we have a cracking panel lined up in front of us today. First, we have Aditya Ghosh, who's graduated from India's Delhi University. He was president of the board of Indigo for 10 years, turned it into India's largest and most profitable airline, served as the CEO at Oyo Hotels and Homes, India and South Asia, sits on the board of directors at Fab India, and also acts as a venture cap investor. He's currently working on a return to the aviation space as co-founder of Akasa Air. So super exciting. We also have Adwaita Nayar with us, who's an alumni of Yale University and our very own Harvard Business School. Currently, she's CEO at Nykaa Fashion, a retail platform which is making waves in the Indian market right now, with previous experiences at Morgan Stanley and Bain & Company. We're looking forward to hear from you, Adwaita, your thoughts about e-commerce and fashion in India today. The panel is being moderated by my colleague, Anand Gupta, who is a second year at Harvard Business School. So without any further ado, Anand, over to you, and let's get it started.
Great, thanks, Umang. And thanks again, Aditya and Adwaita, for taking your time out to be with us today. I think at first glance, when you look at the topic, emerging sectors, aviation, fashion, and e-commerce, when you club aviation and fashion and e-commerce together, they don't seem like natural allies that you talk about in the same sentence, right? But it's interesting that these two sectors have some similarities, right? They tend to cater to the top, let's say 5 to 15% of the population of India. They're both considered as luxury items. And our sense is that they can also be good proxies to sort of see whether economic growth is truly percolating in the Indian middle class. So we want to explore the themes of how your two sectors, Adwaita, yours fashion and e-commerce, Aditya, yours aviation, what is the future looking like for your two sectors from a 2030 standpoint? And the way I'd like to structure the conversation today is, first I'm going to ask you both a few questions about your businesses and the way your markets are positioned currently. And then some forward-looking questions on how do you see your respective sectors evolve over the next 2, 5, 10 years. So Adwaita, I'd love to start with you. If you can walk us through how Nykaa is structured as a company, and you're the CEO of the Nykaa fashion business. How does that fit into the corporate structure of Nykaa? You have a beauty and personal care business. You have a fashion business. Tell us more about how those two pieces work together, and then we'll take it from there.
Sure. Thanks, Anand. Great to be here, everyone. It's a pleasure to speak to you all. By way of context, I'm currently the CEO of the fashion business, but I've been involved with the overall business pretty much from day one as a co-founder, so I can speak both to the beauty and the fashion side of things. In terms of where fashion fits in, as most of you would know, we started as a beauty e-commerce company back in 2018. Around 2015, 2015, once beauty had sort of taken, good foot in the market, fashion is about 5 to 6x times the size of the beauty market. So we felt, that was a really compelling opportunity. And so now we really have two big verticals, Anand, beauty and fashion, and they sort of sit side by side under the, umbrella of Nykaa overall. But they are side by side. We treat them as separate apps because we do believe in vertical commerce. So we like to do justice to both beauty and fashion separately. And some of you might laugh, but we actually think the way women shop for beauty and fashion is actually totally different. So we keep them as separate apps, separate teams, but a lot of common, functions support both, whether that's HR, tech, etc.
Got it. And while we are getting introduced to your firm, can you also walk us through how you all started out? I mean, clearly there were players in the e-commerce business in India. What was your initial thesis and what's allowed you to have the kind of success that you have? You have the highest average order volumes in the industry. You have among the highest growth rates. So what has enabled Nykaa to create the niche and really dig deep into that niche for itself?
Sure. So, just going back to kind of when we started the business, it was started with a desire actually by my mother, Falguni Nayar, who's the founder and CEO, to want to be an entrepreneur. I remember back in the day, we used to just start with that passion that we wanted to be entrepreneurs. We didn't have any background in beauty. At that time, we always joked that we barely had 3 or 4 lipsticks between the two of us in the whole house. But we really studied a lot of, different research reports, really tried to understand the landscape, honed in on e-commerce. It was just the time when e-commerce was picking up in India, honed in on the fact that women were becoming larger spenders, honed in on the fact that, the other big players in the market would not be focused on beauty because it's often, seen as a smaller category. So while they were focusing on electronics and books and whatnot, we thought, okay, beauty might be a good category to enter with e-commerce because it was low capital required. We didn't have, too much savings to put into this. So these were some of the compelling reasons. And in terms of research and sort of what we saw when we looked around the world, we read a lot about Ulta, Sephora. These are amazing companies. There are a lot of things that make beauty a wonderful space, from very high gross margins to the fact that it's concentrated amongst a few big brands across the world, really hold a lot of power. So they have they're able to invest in platforms that can help grow them. So just started with sort of basic principles that it seemed to be a good business where there would be less competitive intensity, and really then just jumped in. In terms of, I think, why success has sort of come, I always like to use these platforms to also say that success didn't come so easily. The first 3 years were a complete shit show, to be honest. We couldn't really, get the business to scale. It was so hard to even get to 100 orders a day, let alone, the 100,000 that we're at today. But the early days were very tough, very hard to retain a team. So success didn't come immediately. But I think what eventually sort of worked out is heads down, just committing to the business, committing to the plan, committing to the business model, having the relentless execution and faith that it would come together. So I don't think it's one thing. I think it's all the small things: getting the right merchandise, getting the right team, getting the right marketing, and just doing it again and again and again for 4 years. And really, that's when we started to see our first signs of success around 2015.
Okay. And the final introduction question to you about your business and your markets before I move on to Aditya. So thanks for sharing with us about your company and your early evolution. What kind of customers are you targeting primarily today? I read a report, an equity research report about your firm, and it said that your firm is able to cater to about 84 or 85% of PIN codes in India as of FY21, might have increased now. Given that you have such, a sort of pervasive, reach in the Indian market, who are your primary customers today? Are they people in urban areas, in metro cities? Are they in tier 2 cities, tier 3 cities? Can you give us a little bit more insight as to where your customers primarily are today?
Yeah, absolutely. I think first, I'll just start with the fact that all of Nykaa caters to a very, very, very small percentage of the Indian population, right? So if we're talking about 15 million women who transact with us and maybe 20 million women who know us, right? That's just such a tiny segment of what we all know to be the Indian population. So I think the first thing to be aware of is that, as you pointed out in the beginning, that it's still a pretty small segment of society that all our businesses cater to. It's just the sheer fact that even that is a very, very large population that can have very sizable outcomes for businesses. The second piece to note is, the online movement has just started. So in beauty, only 5% of the whole industry is online. 95% of beauty is still transacted offline. So again, so compounded with the fact that you're dealing with a small sliver of the population who can actually afford these sort of luxuries, then combined with the fact that the online shift has not still happened into its, into full fruition. On the fashion side, it's a bit better. I think we have somewhere around 15 to 20% online penetration, but these are still numbers and online penetrations that are far, far away from what the global, what the US or China, et cetera, would be seeing. So huge potential to kind of grow the population that we serve. Coming to the second part of your question, of the 15 to 25 million women who know us and consume with us and whatnot, it's very well spread across tier 1, tier 2, tier 3. I think people often get surprised that it's pretty much a 1/3, 1/3, 1/3 split. I always say I traveled a lot with Nykaa. I went into, tier 2 cities and smaller cities to open stores. And I was always struck that there is appetite to consume these products wherever you go. So whether it was a Bhubaneswar or Guwahati, I sometimes found that our audience there to be even savvier and even more cosmopolitan than often the girls you'd find in Bombay and Delhi. So I think assuming that tier 2, tier 3 does not have your audience is incorrect. There is this sliver of population everywhere you go, but it is still a small sliver.
Yeah, no, thanks for sharing. If I had to guess, I wouldn't have guessed an equal 1/3 split between the three sort of categories of cities. Aditya, thanks for being here. It's a pleasure to see you again. For some of you all on the call, Aditya had hosted a group of us Harvard graduate students earlier in December, and we'd had a fascinating conversation. Aditya was a gracious host, and he shared these mind-blowing insights with us on the aviation sector, some of which I hope to sort of pull back and into the conversation today for the benefit of our larger group. Aditya, I'd love to start by first congratulating you. We've seen the promos of Akasa Air come out. They look fabulous. We hope you use this platform to tell us a little bit more about when you're launching the business. So let's start with that. Can you tell us about Akasa Air, what the structure is, how have you financed it, and when do you plan to start?
So before I get there, I have to say this, I was never as smart as all of you to get through the MBA program, but I did manage the AMP. So you've got another Harvard alumni here. The other is that before I talk to Akasa, I was just listening to Adwaita, and if I can, take the liberty of adding another sort of perspective to fashion and e-commerce business in India from another segment. As you probably know, I ran the e-commerce business and the online part of the business for Fab India for a while, and I still sit on the board of Fab India, which is the largest sort of lifestyle platform in India, and it's a 62-year-old brand, and a big element of our business comes from apparel, but what's different, of course, is and we are also, of course, in personal care. But we took a slightly different approach, and we've kind of stuck to that brand ethos, and where we kind of promote only local and traditional products, and every product is handcrafted and through local artisans. And for example, all our personal care, the entire personal care range is free from GMOs, or our organic food products are made from organic ingredients, and the whole ethos and the very reason for Fab India to exist is to promote local artisans, is to promote sustainability, and create a massive 60-year-old business out of it. And as some of you might know, we've filed for an IPO too. The reason I added that is that there is a huge potential for businesses in India, as we look at the next 8 years up to 2030, to bring profit and purpose together and create very profitable, large-scale, high-growth businesses, by sticking to doing well and doing good together. And that kind of takes me also to the purpose of bringing Akasa, because we believe that the Indian economy is going to continue to grow, and we have a very, very bright, future ahead of us. As I've spent all my working life in India. I've never worked overseas, and whatever I am today, and whatever the experiences that I've gathered for the past 20, 25 years has been out of this, progressive opening up and gathering pace of India's economy and growth. And as far as aviation is concerned, we think that, like a lot of the, customer segment that Adwaita was referring to, we think that, we will have a much bigger, middle class with disposable income. As far as the aviation market itself is concerned, we think that we are going to overtake China and the United States as being the one of the largest, air passenger markets in the next, 10 years, by about 2030 or so. And in that, there is going to be, I think, opportunities in long haul. There's going to be opportunities in, tier 1 cities, but there's going to be a lot of opportunities in tier 2, tier 3 cities. The Udan scheme, the very first avatar of Udan scheme has brought in a lot of, smaller, less connected, unconnected, markets to bigger cities. And now there is Udan 2, which is helping the helicopters. It is helping, smaller airports and so on and so forth. So country as large as India is one of the most underpenetrated aircraft markets in the world. We have, I don't know, give or take about 500, 600 airplanes in the country, from a small ATR all the way to a large, Boeing 787, which is less than the number of aircraft that a single airline like Southwest Airlines owns in the United States. So it just goes to show the sheer amount of underpenetrated market that is ahead of us. But India has one of the highest fuel prices in the world, one of the lowest airfares in the world. So it forces management teams and airline teams to really work very, very hard to look at the margins and say, how can we run a growth-oriented, customer-oriented, and financially sustainable business? And that's hard, but that also gives us the opportunity of creating businesses that the world sits back and says, wow, even this is possible. So I think it's really exciting times ahead for the next 8 to 10 years for us.
Thanks for that opening, Aditya. Can you also share some numbers with us in terms of both your sector and how Akasa is planning to grow? Number of unique passenger service. How do you see that number today, or what it was 5 years ago, what it is today, and how that might go, reach, or where that might reach to in 2030? So can you share a little bit about that as well?
Anand, if I can go back more than just 5 years, if I can go back to 2006, when we were starting Indigo in my previous role, which I ran the airline for 10 years, I remember in those days, all air passenger put together, all the airlines put together, was about 18 odd million in a year. Just before COVID, I remember the number was about 169 million. And even this year, we've seen a 50% growth in year-over-year traffic. You can say, of course, that 50% growth is of a smaller base because of COVID. But generally speaking, it's a secular trend. And, you can easily assume about a 12, 15 to 20% growth over the next several years, of air traffic in India. We are planning to start in summer of this year. We've ordered a firm aircraft order of 72 airplanes. We should be, bringing in about one airplane every 2 to 3 weeks for the next several years to come. And if you look at my previous job, even in the other airline, which is now, the largest market share owner, we've seen this kind of secular growth. But it again comes back to which segment of the market grows most and the fastest. And there, I believe, whether it is fashion, whether it is food, whether it is, the aviation business or hotels, various sectors that I'm deeply involved in, the affordable segment of the market and the underpenetrated areas of our country provide the most amount of opportunity, and they bounce back the fastest, they grow the fastest, and they expose completely new consumer trends and consumer segments to businesses like us.
Yeah, no, thanks for these opening remarks. Very powerful and poignant. Adwaita, moving back to you, can you share a little bit with us? Your company started the fashion vertical of your business in 2018, if my research serves me right. What was that decision like to move from beauty and personal care into fashion? There was, you could have sort of doubled down into the BPC market, as it were, but you all chose to expand into the fashion vertical, and now it's increasingly a large percentage of your gross merchandise sales. Can you tell us about the strategy that was undertaken when you all moved into this new segment?
Yeah, absolutely. So, like I mentioned, I mean, some of you may know, I was in your seats, right? 7 years ago, I was in those classes, and I think I think it's a great lesson in business. Actually, Nykaa's moved from beauty and personal care to fashion. I think it makes for a good case study. I'll be honest, it was my mom is an amazing risk taker, and it really came from her. She looked at me sort of in 2017. In fact, I just gotten back from business school, and she was like, why don't we take on fashion? And I looked at her totally crazy, being like, we don't have anything in place in beauty, and now you're talking about fashion, and how can we just jump around like this? And she's like, no, we have to think 10 years ahead. We have to think how we sort of adding modes to our business, adding new growth levers. And I think it's taken me, now we're 3-4 years later, and I can see that it was just such a correct decision. And for a couple of reasons. The first is investors, stakeholders all need growth, right? So you need to make sure that you have the right number of growth engines in place. Growth engines typically take 3 to 4 years to show any kind of fruition. So I think you have to always in business, and when you're building businesses, always keep thinking that what are you adding to your business that can really deliver outstanding growth a couple of years from the line, down the line. So just to put it in perspective, beauty will be a $25 billion industry by 2025 in India. Fashion will be a $125 billion industry in India in 2025. By taking that leap, we actually expanded our TAM from 25 billion to 150 billion. So I think it was a really bold move. And honestly, once we started executing and running towards fashion, we realized that our experience in beauty was really good. And we could leverage that in a very large way to kind of work and succeed in fashion. So I think half the battle was just being willing to take the risk, being willing to, say, listen, we need to do something more. I remember when she started talking about it, everyone said, don't do it. Fashion's a terrible industry, high returns, very high RTOs, discounts are incredibly high. It's nothing like beauty. And they were totally right. It's nothing like beauty. It is fundamentally weaker than beauty in many structural ways. But I think half the battle of being an entrepreneur is saying, listen, I'm still going to do it because I think, this business needs more levels of growth.
Yeah. And it seems to me like your business, both BPC and fashion, are very inventory heavy businesses. When you cater to a large market like India's, which is almost like sub-markets within of itself. The urban market is very different. The tier 2 market is very different. The tier 3 market is very different. How do you manage, or not just how do you manage, but what's your feedback on how do you see things on the ground, like the quality of warehouses, the quality of logistics services, the quality of delivery fleets? Do you see that as a fundamental problem that is a very difficult hurdle to cross? Are you getting into these spaces to improve that part of your value chain? And how do you basically deal with with having that logistical framework on the ground in place?
Yeah, I think, just before I answer that, I forgot to make an important point in the prior question. So, like I said, we actually think fashion will be larger than beauty, perhaps in a couple of years. That's just to put the opportunity in perspective and why we kind of made that shift. Right now, it's about 25% of the consolidated turnover, but over time, we see it actually being larger than beauty. But yeah, coming to your question now, a lot of people ask me this, that it must be damn hard to do business in India on the ground. I think some of you are probably from India. Some of you, are in the US and more based there. You'd be surprised by how good Indian on-ground logistics is getting. Nykaa has we run our own warehouses, but apart from that, we completely outsource logistics all the way up till the last mile. And I have to say that there's brilliant work being done by logistics players in the country, whether that's a Delivery or a Blue Dart. They've really just made it seamless. We don't have to worry about the last mile. Sure, our teams kind of work with them, but it's an outsourced arrangement. It works perfectly well. We choose to handle our own warehouses, but now there are some amazing warehouse providers emerging. There are amazing new technologies on the warehousing side and on the delivery side that are emerging. So I have to say that on ground is really good because a lot of people have jumped into these opportunities and built fabulous companies and fabulous businesses around it.
This might sound like a bit of a novice question, but for the benefit of the group, do you ever get a phone call saying, "Madam, truck stuck ho gaya hai wahan pe, in some tier 2 village or tier 2 city or tier 3 city in, I don't know, in some state that's far away from a metro city"? Do you have to deal with crises like that as the CEO? Or,
absolutely, all the time. All the time you're dealing with, or there's a bandh here, and there's some riot here, and there's some floods in Calcutta, outside of Calcutta. You're dealing with that all the time, but it's nothing insurmountable. And like I said, we're working with outsourced partners who are incredibly good at what they do. And I think in any business, if you were running a last mile business like this in e-com, whether USA, whether India, whether China, you'd be dealing with this one-off ad hoc here and there. But nothing that can't be managed with just strong, execution and reporting and things like that.
Yeah. It's interesting to see that balance or that tension between having a good logistics framework, as you described, and then also having to deal with these one-off challenges that might be unique to India. Another question for you, as you look forward, one, do you at Nykaa, do you all do your business planning cycles in 2 years, 5 years? How far do you look out? And when you try to crystal gaze of what 2030 might look like for you, is it where you have tried to penetrate the tier 1, tier 2, tier 3 markets in India very deeply? Or is it where you say, hey, let's focus on tier 1 and tier 2 and let's go to the US, or let's go to Europe, or let's go to Australia? How do you manage that sort of tension in strategy?
Yeah, so we do 5-year planning, and that's always been something we've done from year one. I really like that model because I think it forces you to, just think harder about your assumptions, think harder about your business model, and kind of drive to the right profitability and right structure going forward. And that's, I think, one of the reasons why Nykaa's, managed to become profitable is because we've always had a very strong culture of adhering to business model, adhering to plans, operating plans, and delivering on those metrics. So just as context, I know this is not exactly your question, but you won't believe it. Like after a very successful IPO a couple months ago, lots of cash in the bank, I have to fight for just a 3 crore marketing spend. So there's huge focus on you didn't budget it, you don't get it. Sorry, let's move on. I think in terms of your next question about what levels going forward, we're not thinking all the way till 2030, to be honest. We're just thinking next 5 years. We think beauty, we have to maintain market share. We're at about 35% fashion. We're at 1% market share. We need to grow to 10% market share. We're building a B2B business. So that's our next growth level. So as some of you might know, a company called Udaan, which is really focusing on it for, let's say, other types of goods. We're going to try to build that for the beauty space. So that's a new business that's taken off over the last year. Then we're focusing on men's. So we're starting a new business called Nykaa Man. So these are some of our growth levels. We're not thinking international. We think that there's a lot to do in India. We'd rather expand verticals within Nykaa. My own passion is wellness. I'd love to see us getting into wellness. We're thinking long and hard and brainstorming about that. But yeah, it's like these 3 or 4 businesses that we have on our table right now.
Awesome. And before I move to Aditya, one final question while we're on this topic. Can you, to the extent that's possible, share with us what Nykaa scale is today in terms of top line, and where do you see that top line go in your 5-year sort of business planning cycle?
Yeah, in fact, we just released our quarterly numbers, learning how to be a public company, what we can say, cannot say. But the latest quarter that just went by, it's about 2,000 crore GMV for this past quarter. So about an 8,000 crore GMV business. And that's about it. That's all I can say.
Oh, that's great. That's great. I knew I was like coming on tricky waters when I asked you to give a forward-looking projection.
Nothing like that. But yeah, can't really say forward-looking. But yeah, that's the scale it is today.
Got it. Awesome. Aditya, coming back to you, you had at one point in one of our private conversations shared with us about what the bottlenecks in the aviation sector are today. And I was surprised to learn that it's actually not demand. It's actually some more fundamental infrastructure. Can you talk to our viewers a little bit about what that exactly is? Is the Indian aviation market today crowded? I know your initial comments said that we're a massively under-penetrated market, but what does that mean in terms of ground reality? Why are we not able to achieve larger market share or larger market penetration numbers today? So what are the key bottlenecks, and how do you see those bottlenecks declog?
Yeah, actually, Anand, in the airline business, you have to have a microscope in one eye, which is basically just looking the next, 3 months, 6 months, how you're going to really optimize your operations, optimize your routes and things like that, because there are just so many external factors that hit the business. But at the same time, you have to have a telescope in the other eye and look out 10, 15, 20 years. Yesterday, I was in a meeting where we were talking about things which will, impact us in 2032, 2033. And we spend hours trying to kind of, figure out how we plan for it today. That's just the nature of the business, because the stakes are just so high. And part of that is growth and penetration, and addressing where the customers are wanting more air service. So demand is almost always, there will be some blips here or there, but if you see for the last 15 odd years that I've definitely been deeply involved in the aviation business, over 18 years now, or going forward for the next 10, 15 years, overall, I think demand will continue to outstrip supply. So that is not where the challenge is going to be. The challenge is going to be to identify where your customers are sitting and whether you can get air service there, which basically means that, do we have enough number of airports? The existing airports, are they efficient enough from an air traffic movement perspective so that there are more number of airplanes or more number of flights that can, utilize the same runway? Are terminal buildings, efficiently designed so that it can optimize the number of people who can go in and go out of the airport and access air service in a very fast, efficient manner? Because each one of these friction points will add to cost, will add to inefficiency. Baggage handling. When we kind of imagine or dream of India being a large hub for international traffic, a lot of it will come out to these really tight windows when hundreds of flights are coming in and going out, and baggage sorting systems are able to cope up with that kind of traffic, and in tandem with the improvement in air traffic movements. Then, for example, just the talent, the skilled talent that you require in areas like pilots and aircraft engineers and flight attendants, and at both ends of the spectrum. People coming straight out of high school and straight out of college and joining the profession, but also gaining experience, because you cannot have a large airline operation with a very inexperienced cockpit, and that experience in the cockpit only comes from flying 5,000, 10,000, 15,000, 20,000 hours over decades. So it's actually a lot of this which needs to come in to be able to address the demand. And then there are some regulatory challenges. The regulatory challenges in terms of, as the aviation market is unfolding, as traffic is increasing, how do you kind of deal with it in some ways? For example, if you had to go to a really small town, which is a large industrial hub but does not have an airport today. There are many such industrial towns across India. But if you had to set up an airport there with the same number of regulations and the same amount of, let's say, security paraphernalia that is applicable to a Mumbai or a Delhi, that airport will just never start. So therefore, one has to kind of start thinking about these things at a much more granular level. If we have to have more number of small aircraft coming in and flying in India, what kind of regulations do pilots require to be able to fly those small airplanes into smaller airports, which may be different from those which apply to someone flying a narrow body jet or a wide body, and things which are not different from more mature markets, but we've got to sort of see around the world and say, hey, how do these folks in other markets solve for it, and how can we make sure that our regulations are in tandem with that? The good news is, whether it is in terms of regulations, I've seen the government over the last several years being very, very open. When I say government, I mean the regulator. When I the security agencies being very open to seeing what are the best practices around the world and see if they can be adopted and adapted to India. This, on the other hand, let's say airport infrastructure. I remember when we were starting Indigo, 16, 17 years ago, getting slots, getting airport, parking bays was nearly impossible. Today, for example, whether it is large airports like Bangalore, where there is a new runway that has come up, Mumbai is going to get a new airport, Delhi is going to get it. I mean, Noida is going to get a new airport. So that a lot of that infrastructure is gradually getting. Goa is going to get a new airport. So a lot of the infrastructure is gradually getting solved for. But like any entrepreneur, we just wanted faster, better, and so we have a birthright to complain. But I've got to tell you that it's not the demand, it's the supply side constraints and the infrastructure.
Yeah, and it seems like your sector is definitely more lockstep with government and regulations. To the extent where you need more airports, you need more runways, you need more on the ground capacity that may not necessarily be in your hand. Right, so you have to plan for.
I mean, and it's the nature of the airline business around the world. It's a highly regulated business.
Yeah.
And whether it is in the US where the Federal Aviation Authority works very closely with OEMs, with airports, with airlines, and that's the other thing, right? There are two other. We keep talking about the airline business, but there are three other big opportunities. There is big opportunity in cargo, there is big opportunity in maintenance and repair, and there is a big opportunity in just training and upskilling and of aviation professionals.
Yeah, I in the Boston area, the metro area of about 4.5 million people, and the airport here has 7 runways that run at any one given time.
That's
Mumbai,
right.
on the other hand, 20 million plus metro population.
Yes.
Correct me if I'm wrong, Aditya, but at this moment, there's only one operational runway at one time. They have cutting runways, but only one runway can operate at any one given time. How do you see? How do you see, with the new airport capacity either coming up in Navi Mumbai or in Noida? You mentioned the Bangalore runway. For your business, taking a forward-looking sort of view, do you see that you will continue to target markets in these matured metros where you might have greater demand, higher willingness to pay, especially with the new infrastructure coming up? Or do you see yourself targeting more the tier 2, the tier 3 cities? And if I can just add here, this is a very novice observation, but when I walk into the Delhi airport, for example, and I look out of the windows, it seems to be like a parking lot at a mall. It's filled to capacity, right, with planes. When you have 72 more aircraft coming into the market, does it make sense for you to compete for these prime parking bays in major metro cities? Or again, is your strategy to say, let's serve tier 2, let's serve tier 3 airports?
Yeah, several questions. Let me answer them one by one. Firstly, in the initial 12 to 18 months, we will limit ourselves to domestic routes, focusing on metro to tier 2, metro to tier 3, cities. Now, the second is that the aircraft that we've ordered, the Boeing MAX aircraft, very fuel efficient. This aircraft range allows us to operate across SAARC, the ASEAN, and the Middle East regions, and we will explore those opportunities as soon as it's practical. The second element in terms of parking bays and slots, there are two elements to it. One is that as air traffic movements get more and more efficient, you'll have more planes flying and up in the sky, which basically means that there is less stress on parking bays to some extent, and it just allows more efficient operations. Parking bays and slots are something that airlines around the world kind of fight over. To that extent, India is the challenges in India are nothing compared to trying to start a new airline in the United States, for example. I mean, today, for the love of money, you cannot find a slot, or you cannot find a parking bay or a gate to check in passengers in almost any of the major airports around the United States. So that's number two. And then there's a number three, which is basically that with these new airports coming up, or existing airports expanding capacity and infrastructure growing in, that's helping us. And the other is that with more privatization, you're also seeing more efficient players private players coming in and taking on the airport business. So the Adani airports, for example, they I think have the concession for about 8 airports today, and from what I understand, they will bid for more. So that then allows for a new carrier with an experienced management team like us to plan 5, 10, 15 years in advance with some of these newer private players on the airport side, so to kind of collectively solve for the infrastructure business. And I'll tie it back to something that we were talking about before. You were talking to on fashion as well. I was speaking with some entrepreneurs, about a bunch of entrepreneurs in Coimbatore recently, and there's a huge textile business in Coimbatore. And in Tirupur, which is close by. Tirupur does not have an airport, for example, and people have to drive 7-8 hours to access their factories and come back. Even though it's wealthy, there's demand, and back to the point that you were mentioning, demand side is not the issue. But tomorrow maybe there could be a cost-efficient and operationally efficient airport that would come up in cities like Tirupur, or for that matter, when we look at logistics across the country, and I'll now step away from just the aviation business, road transportation and the road network has improved dramatically in India, and this continues to improve. I'll give you an example out of Fab India. Nearly half of our vendor partners in Fab India, where we get our products from, are small time vendors who have less than, their entire annual revenue would be less than $60,000-70,000 US a year. So but they are being able to send us material. We are being able to turn them into great products and sell them in our stores in over 300 stores across the country, and we have a presence with these artisans in over 100 districts in India. So you can see, whether it is air transportation, whether it is road network, whether it is logistics, whether it is cargo, yes, there are challenges, but those challenges are something which gives us the opportunity to improve and doesn't take away from that, that dream to pursue that, $5 trillion economy that we want to build India into in the next, 72 months.
So Aditya, before we move on to Q&A, just one final question for you, and let's keep this one brief so that we can move on to the Q&A. What does 2030 for you look like? Do you see Akasa competing heavily in the domestic aviation market? Or do you see an opportunity to create an international airline, which can also be like a transitory hub for passengers traveling from west to east? Very quickly on that point, then we move back to Adwaita with the Q&A.
2030 in the airline business is not too far away. So we see a reasonable sized fleet for Akasa. We see great, significant, highly networked presence in the domestic market, but we also see reaching out to regions around in India. But we want to be just focused on consumers. We want to be focused on good schedule. We want to be focused on affordable fares. and really a green airline, which is, which captures the imagination of being a friendly, customer-oriented airline. Like I said, 2030 is not far in the airline business. It seems like around the corner.
What's fascinating having this conversation is to jump between fashion and e-commerce and aviation repeatedly. Again, yes, not natural allies when you think about, framing two sectors in the same sentence, but what a fascinating conversation, just intellectually.
And the same thing I've seen it in the hotels business, with the OYO across the country. But let's get into Q&A.
Yes, I would love to ask both of you more questions, but in the interest of time, we have some really good questions that have poured in from our audience members. So Adwaita, I'll start with you. The point that Aditya just mentioned about wanting to be a green airline, for you and your company, as you look at expanding market share over the next 5-10 years, and as you mentioned, you're going to be competing for about $200 billion of overall sort of total addressable market, say in the next 5 years. How do you think about incorporating sustainability practices in your business? The question asked by Meghna. She asked about how do you incorporate sustainability in your business practices?
Yeah, absolutely. So, honestly, I think a lot about this. We get asked this kind of question a lot. See, there's the table stakes that we have to do to move away from plastic packaging, and we have to move to more, green methods of packaging. We're trying to use some of our CSR budget to give back to environmental causes. But I personally have to say that I find those answers a little bit not very comprehensive. I think what I'm struggling with on the sustainability side, again, being totally candid, I was just telling someone this in my family over dinner last night. What I'm struggling with is I can't figure out how to quantify how bad certain parts of our business are for the environment, right? So someone might turn around and be like, oh, like lipsticks use plastic packaging, and how bad is that? But I'm not able to grapple with, in the grand scheme of everything we do, is that the worst thing? Or is the sheer fact that we go on sale and incentivize people to shop again and again worse? Or is it like the whole logistics last mile worse? I'm sort of struggling with the quantification of all the various parts of our business and what is driving, the worst kind of environment. And then from there, sort of need to work on figuring out how do we come up with something that's just more robust, right? I can answer this question saying that this is the one or two things we're doing, but I personally don't feel that that's a robust enough answer. And I just want to be candid with that. Still need to learn and think and research a lot more on this space to really understand truly the footprint. My gut feeling says that what makes Nykaa not very good for the environment is simply that it's consumption, right? Fundamentally, like people buying all these clothes, fast fashion is not good for the environment. So I think, unfortunately, like a little bit of our business model is at odds with truly what is sustainable, which is frankly less consumption. That's my understanding. Aditya, I'd love your view on that. I don't think we can say that we're not going to do this business because our business is about consumption. It is about, selling things to people. But I think what I'm currently thinking is that, can we use our voice to at least create awareness? Can we use our voice to help people learn enough to make the right conscious choices for themselves? But for us to even do that, for me to be able to communicate to people how bad denim is for the environment, I still need to understand myself a little bit better. But once I understand that, I'd like to really use a platform as a voice that communicates it more, because I think it's hypocritical any other way, because fundamentally, buying so much of clothes and so much of makeup, that itself is a little unsustainable.
I know, very candid views. Aditya, I'll let you also respond to that question, given your Fab India background.
Yeah. So let's start off with what Aditya is saying, right? It is a big battle, okay, and it's a huge challenge. Having said that, what we have been able to do at Fab India, and it's an ongoing battle, is to make certain choices that the kind of products we are putting out there, is it artisanal? We're just completely artisan based, right? We're completely locally produced. Our organic food products are we are the largest. We're as you probably know, we're the largest network or organization of organic farmers in the country, under Organic India. When I spend time in these clusters, it's about kind of trying to build an entire ecosystem around it. I'll give you an example from another part of my life, where I am the chairperson of the Seva Social Enterprises, which is the country's largest trade union of 2 million, nearly 2 million women. We work with salt pan workers. We work with salt pan workers in the salt deserts of Gujarat. One of the things is, to just create salt, you've got to pump out water, and to pump out water, you need these water pumps. And traditionally, for years and years and years, it has been diesel gen sets, which have been powering this in the middle of nowhere. And we have been, gradually one pump by one pump, changing them over to solar powered agri water pumps. So which then has several impacts. One, of course, you're not using diesel now. You're completely green energy based. But more than even that, the women do not have to walk 20 kilometers with a jerry can through the desert to pick up, diesel and then come back in, right? And then that starts creating, other impact. It's a slow journey, and it's a, one step after another kind of journey. And we can have a totally different, like 1 hour or a couple of hours discussion around this subject. But I have to emphasize what Adwaita said. It's also about being able to get the message across. And once we are able to really articulate our story to our consumers and get them to make a conscious choice, business kind of follows.
So thanks for sharing that. Adwaita, another question for you has come from Akshit Singla. He raises this important question of how digital technologies will help you reach larger shares of the market. And given that you are primarily a digital platform, with the onset of Jio and how Jio has been widely adopted and how internet and connectivity has been widely adopted across India, how are you seeing your digital way to reach customers as an enabling factor to you to reach tier 2, tier 3 markets where people might not have had access to luxury brands and to luxury products?
See, like I said, I think one thing I just want to kind of state is that tier 2, tier 3 are our consumers already, right? There's this concept of like a mindset can exist anywhere, a purchasing power can exist anywhere. And that's what I'm seeing, that even in smaller cities and towns, you have people who have demand for these products and are wealthy enough to afford them. So I think the question is not about doubling down further on tier 2, tier 3. The app is available everywhere. Last mile logistics is available everywhere. Awareness exists in those relevant pockets. So I don't think there's any major shift to our business. I actually think this whole new wave of digitization and online penetration is actually more important for some of the players who play on the lower price spectrum. Nykaa is a premium player and we will always remain fairly premium. So we don't have ambition to start selling kurtas at 100 rupees and 150 rupees. So I think this question of digitization as it spreads wider, I think it's a massive opportunity, and you see the battles being played out between Meesho and some parts of Flipkart's business, some parts of Myntra's business and so forth, but we're trying to be a little bit above it in terms of premiumization. Don't know if that answered the question, but basically what I'm trying to say is that it is a huge opportunity. It's not really one Nykaa's really focusing on. I think just to put our strategy a bit more clearly, we don't want to go into the trenches and play with these guys on cost and price. We want to stay more premium. We want to stay more aspirational. We want to stay more discovery led. You can't be everything to everyone. And that's what we're focusing on because we think there's less competition. We think we know how to play that business.
Got it. And I guess just as a follow-up to that question, do you feel like, the fact that you can now reach customers in some of these other cities that you couldn't have before through technology, do you feel like there's untapped demand even in your premium sort of pricing segment in some of these other non-metro places? Do you see that come about?
Yeah, that's what I've been trying to say, that there's amazing demand for our products in all sorts of cities, including tier 2, tier 3, and that's always been there and it continues to be there. Our tier 1, tier 2, tier 3 mix of 30, 30, 30 has been there from day one. And it just remains, and it's pretty incredible that balance sort of remains. That demand has been there. We've been able to address it pretty successfully from day one because it is an app. It's always worked everywhere, right? It's a website. It's always sort of worked everywhere. Yeah.
No, that's great. Before I move on to Aditya, one more question for you, more on your business strategy, Adwaita. Another question has come in where basically they're asking, and some of these themes you've already touched upon in your comments, but the question is, does the fact that you're a public company now impact the way you think about strategic choices around growth and profitability? Are you more profit focused now? Are you more growth focused now? How does that look like for you for the next 2 to 5 years?
Yeah, I loved that question. I actually answered privately, and I'll state it again. I think that's been amazing learning for me, watching Nykaa go from private to public. The actual IPO process itself was a fantastic, exhilarating learning experience for me personally. But yes, things have changed since, and most notably, the pressure to be profitable quarter on quarter. See, I think Nykaa had just turned profitable. We went public, and now there's a lot of pressure to be profitable quarter on quarter on quarter. And so we are really grappling with how to drive profit while yet not letting go of our growth ambitions. I think it's a tricky balance. I think it's particularly tricky in this period over the next year or two, as we're still kind of scaling into profit in a nice, meaningful way. But yeah, we feel that pressure a lot because I think Nykaa is probably the second tech company, right, to go public. And so, I think the markets were not necessarily, they don't really know how to value these tech-driven businesses, and they do demand profit. And so we are being held to sort of profitability standards, and the investors do demand it. And that's where our focus is.
Yeah. One of the intellectual gymnastics I've liked about this conversation is one, this jump between fashion and e-commerce and aviation. And the second is also the quarter-in-quarter focus versus the 2030 focus. So with that, Aditya, I'll ask the last question to you. We have 3 minutes to go. There's a question come from a gentleman whose name is Mr. Muhammad. He asks, and I kind of smiled when I read this question. Would love to know what you think about it. Will we be seeing a price war between Indigo and Akasa Air to become India's most affordable airline carrier?
Difficult to predict what's going to happen with fares, but essentially, what happens is that it's a very demand supply led market and business, and so I would not be surprised if there is competition for a certain number of customers in one route, but generally speaking, I think there is space for not just Indigo and Akasa, but there is space for 2 or 3 well-run airlines. But I also believe that affordable pricing, but in a sustainable manner, which means in a profit-making manner, will ultimately be the mantra for success for many businesses, whether it is air transportation or hotels or many other businesses. I also think that low cost has nothing to do with low quality. That's extremely important to understand. And there are several businesses in India which have been extremely cost conscious, but have churned out very high quality products and services, across sectors. So I think one has to step back and see what's the opportunity you're chasing, what's the need of the customer, what is the product you're putting out there, and are you putting it out there in an affordable price with consistency of quality and service.
Great, thank you so much, Aditya. We're almost coming to close. So I'm going to ask my colleague Umang to come back online and give the closing statements. But thank you so much, Adwaita and Aditya. I'm surprised how fast time flew. What a great conversation. Adwaita, nice to meet you, and Aditya, good to see you again.
And I hope I'm going to see all of you again in person, soon in India. Happy to host you and your next generation of batchmates over and over again.
Sounds good. Umang?
Yes, just to echo Anand, thank you again, Adwaita, Aditya, for your time. Also to our attendees, thank you for attending and for your time. We have a lot of excellent sessions lined up going ahead. As you can see on your screens right now, this is the immediate next couple of sessions. We'd encourage you to join. We have, again, a cracking set of panelists for both of them. We'll post the Zoom links on the chat. Thank you once again, and hope to see you in more sessions.
Thank you. Thank you.
Thanks, everyone. Thank you.